Hello, in this presentation we will compare QuickBooks Online, QuickBooks Desktop, and Excel. Hello, in this presentation we will set up vendors and vendor balances into QuickBooks Online. We will have a comprehensive QuickBooks Online course soon, if not available yet. We also have a comprehensive Excel course which complements the QuickBooks courses and a QuickBooks Pro desktop version course you can find at the link below. Here we are on the QuickBooks dashboard. We are in the Get Great Guitars problem. We will be continuing with the entering of vendors. In order to enter the vendors, you want to make sure that we have this window open here. So we want to click on that window to have that open. Vendors are who we pay. Therefore, they will be in this tab, the Expenses tab. So we select that tab. We're going to go to the second item up top, the second tab up top, which will be the vendors. Scrolling down, we have the add vendor and we have the import file. If we have a lot of vendors we need to import, then we can use the import. We're just going to add the vendors as we go for this item. It's going to be very similar, of course, to the customers when we added the customers in a prior presentation. This time we only have the one vendor, so we're going to use the add vendor function here. We then have the data input screen. Now there's going to be a lot of information. We have the title, we've got the first name, last name, suffix, and all this would be great information. The minimum we need is going to be the vendor name so that we can track any balances that are still outstanding at this point. We're going to put in the name of Epiphone as our vendor name. We'll just tab through some of these sections. We got the display name will be the same. We're going to have the address. Again, good information to put in place. We're not going to put it in place here. We're just going to have the minimum of the name in order to record the accounts payable. Phone number, fax, other, website, billing, terms, opening balance. This is something that we do want to have input. We're going to say that we owe Epiphone, in this case, $15,000. So that will be the opening balance. We're going to have our problem as of the start date of January 1st, 2021. Therefore, we're going to put the opening balances in as of the day before that date. So we're going to say 12/31/20. 12/31/20. That's going to be the day before we start entering the data into this particular problem. And that will be it. We're going to save that. And that should save our vendor. Here's our vendor. Here's our opening balance. Note it shows the $15,000 that will be going into accounts payable, and in order to make that work, QuickBooks will have to have some other side to that journal entry as well. Let's take a look at some reports in order to see how that works. Reports over here on the left-hand side, we're going to select reports. Then we're going to type in first the balance sheet, and note it's going to be in order of the reports. We're going to go to the balance sheet. And then we're going to change the dates. Dates are going to be, let's put 12/31/20 to 12/31/20. So December 31st, 2020 to December 31st, 2020. We will then go ahead and run that report. And we see our accounts receivable from the prior presentation. We have the $15,000 here in accounts payable under, of course, the liabilities section. Now we're still in balance here because QuickBooks put the $15,000 in and must have done something somewhere else, most likely putting it into some way the net income. So we have this net income. That's not really where we want it, but it will work, and we'll see why in a second. If we select this $15,000 in accounts payable, we see this item here. Now note that QuickBooks creates a bill even though we didn't really enter a bill. All we did was enter the opening balance. QuickBooks will assume, given the fact that it is a vendor, that it will be a bill that has been generated. So that's going to be okay as long as it was made prior to the month that we actually start doing work. And so we're going to go back to the report here. Then, well, let's look at the dates of the next day, so the next year, January 1st, 2021. Note, I'm just hitting the plus button in order to get one day later, so it's at 12/31/2020. The plus button takes us to January 1st, 2021, and then we got to run the report once again. So then if we scroll back down, note that it moved the net income to the retained earnings. That, in essence, is what we want, because we want to have nothing in net income as of the days that we're going to start to input the data. Net income summarizing and representing the income statement or profit and loss. So let's take a look at the income statement or profit and loss and see that in more detail. So we're going to go to the reports over here, left-hand side, reports, selecting the reports. We're going to type in profit and loss, which is QuickBooks income statement, and scroll up to the profit and loss. Within the profit and loss, we'll do the same thing. We're going to have this as of 12/31/20, 12/31/20. We will run that report. And here we have the revenue from the prior presentation, and then they put net income here. Note we didn't put anything in terms of invoices or bills in. All we did was put those opening balances in, and QuickBooks made up this account other miscellaneous expenses. So that's obviously not an account we really want to see. However, it will roll out to retained earnings as of the first day of the next month, and therefore shouldn't be a problem. If we click on this item here, we'll see that once again will be the bill that we had. So we're going to go back. I'm going to go back to the report. And let's see what this report looks like as of the first day that we're going to be operating, which will be January 1st, 2020. I'm going to select the plus arrow, tab, plus arrow, and run the report. So here we have no activity, of course, and that's because they're all temporary accounts on the profit and loss or income statement, and we don't have any income and expense as of the first day of the next year. That's what we want. That's where we want to start. So we're going to go back to the reports and get the vendor balance report. So I'm going to type out vendor balance. Let's do the summary report, vendor balance summary report. And we'll go ahead and export this report to Excel. So there's only this one activity here, so we're going to go ahead and export that. In order to do that, we're going to select this item here and go to the Excel, export to Excel, and it will generate that report for us. We will go ahead and enable the editing, and here is our report. It saves the tab, nicely tabbed, looks formatted well, so we're going to go ahead and go File and Save As and place this where we would like to have it in our documents. Here's where we'll place the file. I'm going to name the file Section 6 and Get Great Guitars, and we'll keep it there with the vendor balance. So we will save that, and that will be the vendor balance. Hello, in this presentation we will be setting up vendors in QuickBooks Pro 2018. In prior presentations, we discussed how to download QuickBooks, how to set up the preferences, how to enter items and customers, and now we're going to move to vendors. If you haven't seen those prior videos, that's okay. We can start here from the vendors just to see how to set up the vendors and work within the vendors center. If you're working along with the problem and you have the backup file, you could then restore the backup file at this point. And that way you'd be at the exact same point we are, even if something went wrong in the past. If not, then we'll just learn the vendor center information, how to enter multiple vendors at one time. If you wanted to restore the data file, then you would want to go to the File tab and then open and restore the company, as we've seen in the past, and that should take you to the same point we are at here. Once we open this up, note the first thing I would recommend is go into the View tab all the time and go into Open Windows. I like to have, just so you can see, it always starts with these tabs, the shortcuts on the left-hand side. Those are not as helpful to me as having the Open Windows tab. So I like going to the View tab and go to Open Windows List, and that'll give us what we are currently have open that we are currently working on. Usually the default is the home page. I'll keep the home page. I'm going to make it a little bit larger here. Okay, so the next item we're going to do, we're going to enter vendors. Now, we're assuming that we have started a new company and we have a list of vendors, some vendors that we want to enter into our system here and put those vendors into play. So vendors then, of course, are the people that we purchase from, the people that we're buying stuff from. In this case, typically inventory. In our case, in our example, that being guitars. Within the vendor, within the home page, You could go to the vendor center by going up to vendors up top and to the vendor center, but I always recommend going to the drop down because you can do that at any point within the system. So no matter what is open, if it isn't the home page, you can always go to the vendor up top and go to the vendor center. So once again, that's vendors at top, vendor center. Now this is going to look similar to the customer center, except of course the difference being we have vendors. Similar layout because it's the same thing in reverse. Customers being people who owe us money, vendors being people who we owe money to, and therefore we're going to need a list in the case of customer centers who owes us money, in the case of vendor centers who we owe money to, and therefore the setup looks much the same with both the vendor and customer center. We're going to go ahead and just enter one vendor at this case. That's going to be the Epiphone. And we're going to start off, meaning someone who we buy guitars from in this example. And we're going to start off doing this mainly because when we start the new company, we want to input the data for those who we owe money to at the beginning. So we're going to enter a beginning balance and let QuickBooks calculate that beginning balance for us. Let it do the journal entry for us without us having to do debits and credits, and let it do its thing in the simplified way. So we're assuming here that we have a vendor as we started up a new company, and we owe that vendor $15,000. We want to put that information into our system without having to do anything complex or a journal entry. In order to do that, just put in those beginning balances. In order to do that, we're going to go to, within the vendor center, we're going to go to the new vendor. And instead of adding multiple vendors as we did with the customers, we just need one new vendor because we're only going to be doing this with one vendor at this point. And so then we have this familiar vendor center. Now all I'm going to do is put in Epiphone, and that's who we owe the $15,000 to. That's going to be our vendor. Now the main thing we want to do there is we want to have the beginning balance of the $15,000. And I could put the date here at the 10/5 because I'm going to be working in a future date. But I'm going to put the date right before the year that we're starting with, is 2021. So I'm going to put it in 12/31/20. And that's because we're going to be working this problem within the future here. And that's just the nature, once again, of working through these types of problems. And therefore, we're going to say that this is the last date of the year before the year that we're going to be entering data into. It's going to be 2021, what we'll be working with. That means that this $15,000 will be on the books as of the end of the prior period, and therefore on the books at January 1st of the current year, 2021, that we will be working with. Now the company name, I'm just going to put the same name. And most of this other information I'm not going to input at this time. We will be dealing with more vendors at a later point, so we can put a lot more of this information in. Typically when we're writing the bills, of course, when we're writing checks, we need the name of the vendor that we owe. It's the main thing that we're going to need. Depending on whether or not we'll be using the billing option within QuickBooks and printing out, which we typically may not be using if we're mailing out a bill back to someone who sent us a bill. We would want, of course, the information in terms of the address and the phone and whatnot. We're not going to put this information at this point. We're just going to set up the primary purpose here, which is to put that beginning balance in without having to do a journal entry when we set up the new company. We'll look at some of these other options at a later point. Note that we do have the options over here on the payment tab. These are going to be payment options, the terms, normal terms of payment within the vendors. We have the tax settings, the vendor ID, account settings, and additional information. So we're going to move forward with just this beginning balance and see what QuickBooks does with that at this point. So we will say OK there. And here, of course, within the vendor center, then we have the Epiphone 15,000. Now, the question here is, what is QuickBooks going to do with that? Note that we basically are showing here that we owe 15,000. What's going to be where's it going to show up on the financial statements, basically? If we go to reports up top and look at one of our main reports, we're going to see the reports drop down up top. We're going to go to the company and financials, and we're going to scroll down to the balance sheet and see what QuickBooks, try to see what QuickBooks did with this. Now, if nothing shows up, then we're going to change the date. We're going to say it's probably a date thing. And we're going to say 12/31/20 is the date that we entered this information as of. And we see here we've got the accounts payable of the 15. That's what we would expect. We owe the 15 in accounts payable to the vendor. And the question here then is, the reason that was so simple to do is because we didn't have to do the full journal entry. What's the other side of the journal entry? We increased one account of liability here. Something else must have happened. And note that net income is dumping it somehow down here into the equity section. And QuickBooks is basically doing that for us. It's doing the other side of the entry. So let's drill down on this 15 and see what it looks like. We'll get back to the data source. This is called zooming in on it. So auto zoom, I believe, is the proper name. So we'll double click on this 15 and see where that is going, what they're going to take us to. They're going to call it a bill, of course, because a bill is typically the type of document used in order to have a payable. Although we didn't enter a bill, we just entered the beginning balance. QuickBooks uses bills as that driving component. And note the memo account is opening balance, equity. If we double click on that 15 again, we see the bill. So it's going to enter a bill. And again, note that the memo amount is going to be the opening balance equity account, that being the other account that we are taking this to. It's got it here into, uncategorized expense, and the memo is opening balance. So it put this information into a journal entry 1, taking it to accounts payable, increasing the amount owed, and the other side being the uncategorized expense. So it just kind of dumped it into that uncategorized expense. That's the journal entry that was made. That's basically fine for us because we're really starting this system up in 2021. So the fact that we put this in the prior year in an uncategorized expense is okay. Let's take a look at that a bit further. I'm going to close this. We're back to our balance sheet. We see this here. Going to go back to reports up top, and we'll go to the company of financial and look at the main other one, which will be the profit and loss, similar to the income statement. It is basically the income statement for QuickBooks. And we'll put the date range here. I'm going to say 01/01/20 to 12/31/20. And remember, we entered that data, the 15,000, into the 12/31. And note we have information here. We haven't entered anything in here, but we have uncategorized income and we have uncategorized expenses. Why? Because in the prior video, we had put in a beginning balance in the accounts receivable, which QuickBooks put into uncategorized income. And now we put something into the beginning balance for a vendor, and that put it into accounts payable, and the other side went to this expense account. This income statement makes no sense to us. We wouldn't want to report uncategorized income or expense, but by us putting this in there as of 12/31, it will roll over to the next year properly, and we won't have a problem as of 2021 going forward. We're not worried about 2020 in terms of the income statement. We're basically worried about only the balance sheet, that we have that amount that we owe. And in order to have the simplicity of QuickBooks to just set this up without us doing debits and credits or a journal entry or having two accounts do one thing, we can just enter the opening balance. QuickBooks will dump it into the other account, that being uncategorized. And as long as we're basically just looking for the beginning balance sheet and not the activity in the prior year, we are okay. So this, once again, makes no sense. However, not a problem because we're not using QuickBooks for 2020. We're only setting up the information as of 12/31/20 so that we can then have a beginning balance correct as of first year we will be working with, which is January 1st, 2021. So that's the goal of this process. Going to close this back out, and then I'm going to go back to the vendor center one more time, and then we're going to print a report of the vendors. To go back to the vendors then, notice we have our toggling through the open windows on this side. That again, if you don't have open, it's in the view tab and you want to go to the open windows there. And or we can close out the balance sheet. That will take us back to the vendor. I'm going to go ahead and say no, don't memorize that. And so we only have the one vendor. What we'd like to see is a report that would show these vendors. And so I'm going to show that and we're going to export that to Excel with all of our other chapter 6 or section 6 stuff, and that's going to be great. So we're going to go to the reports tab up top. We're going to go down to the company financial, and actually we're not going down to company and financial, excuse me. We're going down to vendor and payables, where we have the AP AG, the AP aging detail, the vendor balance summary. That's what I'm going to deal with right now. That's what we're going to be working with at this point, the vendor balance summary. And that is, as it would assume to be, as it is named, a vendor balance summary. That is who we owe. We only owe this one individual company, the $15,000. Note there's no date range, so it's basically taking the most current information in there, which is of course in the future. So QuickBooks is picking this up, assuming the most current, which in this case 12/31/20. And we're going to go ahead and export this information. We could save this, we could print it as a PDF. We could export it. I'm going to go ahead and export it to a workbook that we have already set up and show us how we can put all this into one particular workbook. And in order to do that, we're going to go to Excel over here and we're going to go to create new worksheet. That's worksheet within the workbook. And then once this opens up, we want it not in a new workbook, but in the existing workbook, one we have created in the past. If you have not created one, you can go ahead and put it into a new workbook. That would then open a new workbook and put it there. But we're going to go ahead and browse and see it. It's already going to where we want it to go because we've done this a few times. But we're going to go to this item. It's on the desktop. And it's right here in the section 6. That's what we're going to be placing this into. So I'm going to double click on that. And there we have it. And then export. Once that happens, it should open up this pre-existing Excel worksheet that we have set up in the past and enter a new tab. There it is, new tab. Now it put it right in the middle of these other reports I have previously worked on in this sheet 1. And we have previously worked on, and we're going to drag this. I'm going to drag this to the right. I'm just going to click on it and drag it to the right and have it over here. Then I'm going to double click on it and I'm going to say vendors. I'll just call it vendors. How about that? There we have it. Now I'm going to make this a bit larger here. So I'm holding down Control and scrolling, or you can use your tab over here and just make it a bit larger. And that's that. That is that report. Note that if you want to see the header on these reports, you can go to the print preview type options or the page layout type option down here, and it'll then go to the page layout and you can see the header. So there is a header on it, as there is in the report back over here. You can also see that on the file tab, and if you go to the print icon, you'll see the preview, which does indeed have a header and the dates at this point, which you could keep or remove depending on your preferences. Note, when we went back and forth, it put these items there, and as we've discussed in the past, you can go to the View tab in order to remove those, and those are going to be the split screens. So for some reason, there's a default to have those split screens. You can go ahead and remove that. And then we want to save this file, and then once again, what we have gotten so far is we've done the item lists, we've done the customer balance, and we've done the vendors for our new company data that we are now being put into the QuickBooks 2018 program. Hello, in this presentation, we'll talk about the financial transactions related to setting up vendor balances into our bookkeeping problem in Excel, keeping in mind how that same information might be input into accounting software such as QuickBooks. If you would like more information about the QuickBooks Pro, take a look at our comprehensive course in the link below. We will first take a quick look at QuickBooks and then put this information into Excel. When considering QuickBooks, if we were to start the new business and enter our vendors within the new business, then we could just go into the vendor section, add the vendors, and then go in and put the beginning balances into the vendor section. That's not something we can do with every type of accounting software. Oftentimes we would need to put a journal entry of some time into accounting software. QuickBooks allows us to just automatically input that information into the beginning balance. As we do so, then QuickBooks makes the journal entry, meaning it will make a journal entry to some other account, possibly an account called opening balance equity or undefined expense account. Once we enter those opening balances, if we run the vendor balance summary, in this case we have the $15,000 that was entered into that opening balance, it would then be in the accounts payable account as well as the vendor balance summary. Let's take a look at entering this information into Excel. Here we are back in Excel, and we remember last time we entered our inventory, we entered our receivables. We will now be entering the fact that we owe vendors money, and the account representing us owing people money, particular vendors money, would be the accounts payable account. So that is what we will be working on. When we record a journal entry, part of it will go to accounts receivable, representing the fact that we owe vendors money. Then we're going to, of course, have another half of the journal entry we will have to record. When we put this information into an accounting software just to start out, just listing what we owe to somebody, QuickBooks then made this journal entry and we didn't really see it, and we'll actually record the journal entry here as we do this. Now, what we did see within QuickBooks is when we set something up in QuickBooks, what we would see is we would just list out the beginning balance that we owe to a particular vendor. That would be for us a subsidiary ledger. So we're going to have a new subsidiary ledger where we're just going to list out who we owe, and that will back up the accounts payable account. So we'll list out the subsidiary ledger first. That's what we would typically do in accounting software. I'm going to use the left arrow. We'll just keep on going. The right arrow. We're going to the right. We're just going to keep on going right until we find our new item over here, which will be the orange accounts. It's all the way over here in CZ2. CZ2, we see our information. We're going to enter new vendors into this information. This is what we will call our subsidiary ledger for accounts payable, similar to a subsidiary ledger for accounts receivable over here, in that we're going to list the vendors we have, in this case only one, and how much is owed to those vendors, and put that information here. That will back up the information on the trial balance and the financial statements under accounts payable. So we're going to put here Epiphone. That's the vendor that we owe at this time. Remember that we're typing that into CZ4 here, and then it'll populate in the middle. We're going to put the amount we owe. I'm going to put it in the credit column, and I'm going to represent credits with a negative number, so it will be consistent with that because accounts payable is a credit balance. We're going to put it in there with a credit in cell DA7 negative, and we're going to put 15,000. We're not going to put any commas or anything like that, and we're just going to select enter. It'll put the brackets around and 15,000. We'll also have the total up here. It's just summing up all the vendors that we owe, only one at this time. And that amount then is what should be on the financial statements. When just putting this information into an accounting software, typically we'll just generate some type of journal entry and create that journal entry within accounts payable. We will here record that journal entry. So we're going to go all the way to the left. I'm just holding down the left arrow, going all the way back. You can just keep holding it down until you hit the wall, all the way back to column A. We're going to start a new entry with the date on 1/1. Once again, first day of the year we will be operating in. And we are going to put the amounts here. Accounts payable is what we owe. Now, accounts payable is a liability account. We are increasing the liability account. Therefore, we're going to do the same thing to it as its normal balance, which is a credit. So we're going to credit accounts payable representing the fact that we owe vendor, the one vendor in this case, $15,000. I'm going to copy this cell in AJ13, right click and copy, and put that over here in B12, right clicking and pasting 1, 2, 3. We'll then put the amount in the credit column in D12 with a negative 15,000. That's the amount. We're then going to need to debit something for 15,000 to have the debits equal the credits, and we need to know what will that debit be. We know that 15,000 most likely was a purchase of inventory. So we most likely had inventory that we purchased at some point, but we're not going to debit inventory because we purchased it in the past. And what we're doing is really following what we're doing when we set up these new beginning balances in a software such as QuickBooks, and just going to put that other side to some type of equity account. In this case, we're going to put it to owner's equity. The idea being that although we purchased inventory here, we already put the inventory on the books and put the other side to the equity account. And now we're going to put the accounts payable on the books and put the other side on the equity account, meaning it'll all kind of wash out at the end of the day if we put in the correct beginning balances all in place at this time. And that is, in essence, what is going on when we put beginning balances into the QuickBooks account or some type of accounting software when we start a new business and enter the beginning balances without recording the journal entries. So we're going to go ahead and put the other side just to owner's equity. Right click and copy the owner's equity. And we're going to put that in the debit side this time. Right click and paste 1, 2, 3. We're also going to indent the second journal entry. You don't have to, but I'm going to do it anyways. I'm in the Home tab, Alignment Group, and Indent. You can also just click the space bar 3 times or leave it as it is. If there's a formatting problem, then just leave it as it is. If it's locked because of locked cells or because of the protection of the worksheet, then, and remember that we're protecting the worksheet so that you don't delete some of the formulas and mess up the worksheet in the future for you. And so that's going to be the journal entry that we will have. Now, it might look funny that we debit the owner's equity. You could be saying, well, we don't typically do that. And again, it's not because we are this is a normal transaction to do that, but it's because the business is already in process. And this is typically the way we could set up the beginning balances by just making sure that all the beginning balances are correct on the balance sheet and posting the difference to the equity, so it in essence washes all out in the equity section. That's how software like QuickBooks is able to record these journal entries and just give those opening balances and create something that is in balance. So we're going to record this now. We're going to record the owner's equity first. Remember, that's in order, the accounts in order. We've got the assets, the liabilities, and the equity. It's going to be the same order in the general ledger when we look to post these accounts. We're going to go ahead and freeze the panes. So we're going to go back up here to AJ1. Then we're going to go to the View tab, and we're going to go to the Groups, Windows Group, and Freeze Pane. Clicking the Freeze Pane, freezing the panes. And then we'll go over and same order. So I'm just holding down the right arrow. We've got the assets. We've got the liabilities in orange. We've got the equity. We are looking once again for this owner's equity. We were on the debit side this time because we're on the debit side over here. So we're on the debit side over here. And we're going to have the new transaction, and it's in cell BG15. I'm going to select equals, point to that 15,000. When we select enter, it's going to bring that credit balance down by 15 to the 8,397. So once again, if you wanted to just type in, the formula could be equal to, and this cell is C11, equal to C11. And you could type in 15,000 as well, but we'd want to use the formulas as much as possible. If we scroll back to the left over here, we're going to scroll back to the left and see what happens. We see that our information is now being populated. There's the 15 right there. There is the 8,397, and those are coming from, and remember, you may not have ability to use these in a protected worksheet, but we still see the formulas that are coming from this cell. And if we scroll back over here, that's where the 15 is coming from, and that's where the 8,397. If you want to experiment with these functions here, you go to the formulas, and in the formula auditing, you can experiment with these cells. I find them useful. So I'm going to scroll back to the left. So that is what's being made. So now we have accounts receivable of 20,005. We got inventory of 2,897. Of those assets, there's 15,000 claimed to those assets in accounts payable. And the difference then is what is the claim to the owner, or the book value of the company, 20,005 minus plus the 2,875 minus the 15, assets minus liability, equals the 8,397, the 8,397. So note the format here. We can get a nice calculation of what we're doing just from the trial balance, just by using Excel. We can say assets here. In other words, assets equal liabilities. Notice the sign is just flipped here, so it's now in the formula term. I'm not putting a negative in liabilities. It's not a credit in the formula. And then equals liabilities and equity, meaning 15 plus equity of 8,397 equals the assets of 23,397. Or we can say that the assets, debits, minus the liabilities, credits, is 8,397 equal to the equity of 8,397. I'm going to turn off the split features. So if we go to the View tab and we go to the Freeze panes, we're going to unfreeze the panes and then go over to the financial statement. So we'll scroll over to the financials. Well, let's do this first. I'm going to undo these and just point to the fact that this should be going now to the financial statements. So that's going to the financials, and this is going to the financials. And that's how the financials are generated. So I'm going to scroll to the right now. I'm just going to the right with the right arrow all the way to the right till we see the financial statements. And here is the balance sheet where we have the assets totaling the 23,397. The liabilities, there's the 15 there. Total liabilities at 15. There's the 8,397 equity, and therefore the total assets equal the liabilities and equity, and we are in balance. So when looking at software, we typically just jump right to the financials, but remember that those general ledger and the trial balance are being generated as well. Nothing on the income statement. Everything has just been put into the beginning equity account in essence at this time. Therefore, the equity section has that beginning balance and the only activity, none, during the time period. So it's the same as the ending balance at this point.